Cryptocurrency bubble. Predictions of a collapse of a speculative bubble in cryptocurrencies have been made by numerous experts in economics and financial markets. Bitcoin and other cryptocurrencies have been identified as speculative bubbles by several laureates of the Nobel Memorial Prize in Economic Sciences, central bankers, and investors. In 2018, there was a large sell-off of cryptocurrencies. From January to February 2018, the price of Bitcoin fell 65%. By September 2018, the MVIS Crypto Compare Digital Assets 10 Index had lost 80% of its value, making the decline of the cryptocurrency market, in percentage terms, larger than the bursting of the dot-com bubble in 2002. In November 2018, the total market capitalization for Bitcoin fell below $100 billion for the first time since October 2017, and the Bitcoin price fell below $4,000, representing an 80% decline from its peak the previous January. From March the 8th to the 12th, 2020, the Bitcoin price fell by 30% from $8,901 to $6,206. With it down 22% on March 12 alone. By October 2020, Bitcoin was worth approximately $13,200. In November of 2020, Bitcoin again surpassed its previous all-time high of over $19,000. After another surge on the 3rd of January 2021 with $34,792.47, Bitcoin crashed by 17% the next day. Bitcoin traded above $40,000 for the first time on the 8th of January 2021. Bitcoin has been characterized as a speculative bubble by 8 winners of the Nobel Memorial Prize in Economic Sciences: Paul Krugman, Robert J. Shiller, Joseph Stiglitz, Richard Thaler, James Heckman, Thomas Sargent, Angus Deaton, and Oliver Hart, and by central bank officials including Alan Greenspan, Augustine Carstens, Vitor Constancio, and Note Welling. The investors Warren Buffett and George Soros have respectively characterized it as a mirage and a bubble, while the business executives Jack Ma and Jamie Dimon have called it a bubble and a fraud, respectively. JP Morgan Chase CEO Jamie Dimon said later he regrets calling Bitcoin a fraud. Altcoins. Since the release of Bitcoin, over 6,000 altcoins, alternative variants of Bitcoin, or other cryptocurrencies, have been created. A January 2018 article by CBS cautioned about a cryptocurrency bubble and fraud, citing the case of BitConnect, a British company, which received a cease and desist order from the Texas State Securities Board. BitConnect had promised very high monthly returns but hadn't registered with state securities regulators or given their office address. Initial coin offerings. Wired noted in 2017 that the bubble in initial coin offerings, ICOs, was about to burst. Some investors bought ICOs in hopes of participating in the financial gains similar to those enjoyed by early Bitcoin or Ethereum speculators. Binance has been one of the biggest winners in this boom as it surged to become the largest cryptocurrency trading platform by volume. It lists dozens of digital tokens on its exchange. In June 2018, Nella Zhang of Binance Labs, a division of the cryptocurrency exchange Binance, stated that she was hoping to see the bubble in ICOs collapse. She promised to help fight scams and shitcoins. 2017 boom and 2018 crash. The 2018 cryptocurrency crash, also known as the Bitcoin crash and the Great Crypto Crash, is the sell-off of most cryptocurrencies from January 2018. After an unprecedented boom in 2017, the price of Bitcoin fell by about 65% during the month from 6 January to the 6th of February 2018. Subsequently, nearly all other cryptocurrencies also peaked from December 2017 through January 2018, and then followed Bitcoin. By September 2018, cryptocurrencies collapsed 80% from their peak in January 2018, making the 2018 cryptocurrency crash worse than the dot-com bubble's 78% collapse. By the 26th of November, Bitcoin also fell by over 80% from its peak, having lost almost one-third of its value in the previous week. timeline of the crash. Early 2021 Bitcoin boom. In early 2021, Bitcoin price witnessed another boom, soaring more than 700% since March 2020 and surged above the $40,000 mark for the first time on January 7. On January 11, the UK Financial Conduct Authority warned investors against lending or investments in crypto assets, that they should be prepared to lose all their money.